Welcome to the Compliance and Monitoring General Information tutorial for Minnesota Housing's deferred loans. This tutorial covers basic information that allows all owners receiving a Minnesota Housing deferred loan should know, including general information pertaining to deferred loans, an overview of the teams within asset management and contract administration, and what information can be found on the compliance webpage. Other topics include information pertaining to rent and income limits, utility allowances, and other occupancy requirements. This tutorial also includes helpful information regarding affirmative fair housing marketing plans, supportive housing, tenant selection plans or TSPs, the affordability period, also known as the compliance period, certifying tenant eligibility, and pre-closing and post-closing compliance requirements. In addition, basic information on how Minnesota Housing monitors properties for compliance is also discussed. During this tutorial, when owner is referenced, it means the property owner who is or will be the borrower in Minnesota Housing loan agreements, as well as the management company retained by the owner to operate the property. Note that each section outlined on this slide is identified to allow for easier access. The approximate runtime of each section is also indicated. Links are included and can be accessed via the PDF version posted along with this tutorial. This tutorial does not cover compliance or monitoring requirements for housing tax credits under Internal Revenue Code IRC 42 or bond compliance under Section 142 of the IRC. It does not cover compliance requirements for rental assistance programs or federal loan programs that Minnesota Housing lends in the form of deferred loans, such as the Home or National Housing Trust Fund programs, both from the U.S. Department of Housing and Urban Development, or HUD. Owners of properties that are financed with these programs should consult the respective compliance guides and obtain training necessary to operate properties in compliance with federal program requirements. This tutorial also does not cover deferred loans under Minnesota Housing's Workforce Housing Development Program for market rate housing. In addition, due to the many deferred loan programs that Minnesota Housing administers, this tutorial will not cover individual program regulations or loan requirements. Consult respective program guides for program-specific requirements and review legal documents for individual loan requirements. This tutorial also will not cover financial oversight or asset management of Minnesota Housing's amortizing loans or instructions for loan repayment for any Minnesota Housing loan. Finally, this tutorial will provide a few supportive housing resources, but supportive housing will not be discussed in detail. The information presented applies to properties financed with deferred loans currently available in Minnesota Housing's various Request for Proposals RFP funding rounds, including the programs listed on this slide. When they are not paired with the Minnesota Housing amortizing loan, the information in this tutorial also applies to funding sources that are available on a pipeline basis, such as asset management funds or flexible financing for capital cost loans. The information also applies to properties that were financed from the programs listed on this slide where funding is no longer available. If you are unsure whether your loan is subject to the information presented in this tutorial, contact your assigned compliance officer. Additional rules apply to properties financed with Minnesota Affordable Rental Investment Funds, also referred to as MARIF. Detailed MARIF program information and frequently asked occupancy questions can be found on our compliance webpage, covered on a later slide. Before we go into more detail, it will be helpful to understand the teams within asset management and contract administration that may be involved in monitoring your property. The compliance team is responsible for monitoring properties for compliance with rent, income, and other occupancy requirements of the deferred loans mentioned on previous slides. Compliance officers will be the staff responsible for monitoring the activities described in this tutorial. The asset management team oversees properties that have a Minnesota Housing amortizing first mortgage, repayable HIB loans, and any kind of loan with monthly or periodic payments. Minnesota Housing's asset managers provide financial oversight by reviewing monthly operating statements, budgets, approving rent increases, and overseeing loan payments and reserve accounts. They also review audited financial statements and monitor to evaluate whether the owner is maintaining and operating the property for long-term physical and financial sustainability. Asset managers provide less detailed financial oversight for properties financed with Home and National Housing Trust Fund funds in accordance with the requirements of those programs. The Performance-Based Contract Administration, or PBCA team, monitors project-based Section 8 contracts on behalf of HUD. PBCA is split into 3 sub-teams: PBCA HMOs, HAP officers, and TRACS data analysts. The PBCA HMO conducts annual management and operating reviews, or MORs, and other oversight required by Minnesota Housing's contract with HUD, as well as facilitates resolution of tenant complaints. Some PBCA HMOs also oversee Minnesota Housing's amortizing loans as part of the asset management team. HAP officers are responsible for Section 8 contract renewals and funding renewals for both older traditional Section 8 contracts as well as PBCA contracts. They are also responsible for reviewing and approving Section 8 utility allowances. TRACS data analysts are responsible for processing and approving Section 8 housing assistance payments, also referred to as HAP payments, through HUD's Tenant Rental Assistance Certification System, or TRACS, as well as tenant repayment agreements and special claims. Staff from any one or more of these teams may be assigned to your property. All have a duty to monitor properties, but each person has a different lens in terms of what they must monitor and for what purpose. They perform their tasks within their respective program timelines. Staff from these teams often coordinate inspections so residents and management staff are not interrupted multiple times. Because each person is reviewing for different purposes, it is important to always respond to the person who requests information or sends you a notice, unless otherwise directed. So what is a Minnesota Housing Deferred Loan? A deferred loan is permanent debt where payment of the principal and interest is delayed until a future date. Some deferred loans mature after 20 years, and some after 30 years or more. Most have 0% or very low interest rates. Some loans may be structured to be forgiven or partially forgiven at loan maturity if there is no event of default, meaning the owner has complied with all loan requirements. Most loans, however, require repayment of the entire loan balance plus interest, if any, upon the maturity date of the loan or upon repayment of senior debt. Some loans have been structured with annual payments based on the property's cash flow, or with fixed periodic payments that have a balloon payment at loan maturity. Later in this tutorial, we will review the affordability period, also known as the compliance period. This period is the time in which the owner must comply with the income, rent, and other restrictions required by the loan. The affordability period may be the same as or different from the term of the loan. You will find the compliance team's resources on the webpage shown on this slide. The webpage includes links to individual program and compliance guides, occupancy forms, inspection standards, tenant selection plan guidance, and many other compliance resources. Click the Sign Up for Email Updates button in the lower right-hand corner of the webpage and follow the prompts to receive compliance-related e-news notifications, including announcements for updated rent and income limits. Find all rent and income limits used by the multifamily division on the website shown on this slide. Find previous year's limits under the archive or prior year links within each section. Minnesota Housing uses income limits published annually by HUD, usually in April, to calculate rent and income limits for its deferred loan programs. We send an e-news to notify owners when updated rent and income limit charts are available on our website. Check your selection documents and ultimately your legal documents carefully for the specific rent and/or income restrictions for the loan or loans that financed your property. For recently closed deferred loans, rent and income restrictions are stated in Addendums 1 and 2 of the Declaration of Land Use Restrictive Covenants. For older deferred loans, restrictions may be in a declaration, or they may be in a repayment agreement and mortgage or a regulatory agreement. Keep in mind that rent and income limits stated on loan documents for Minnesota Housing's deferred loans are usually reflective of how the owner applied and was selected for funding, and may not always follow the respective program's statutory limits. For example, an Economic Development Housing Challenge EDHC loan may require use of the Housing Tax Credit and Bond Multifamily Tax Subsidy Project MTSP rent and income limits, even though MTSPs are not the statutory EDHC program limits. Owners are required to use the most restrictive, which means if the statutory limit is lower than the MTSP limit, you must use the lower limit. The last few pages in the deferred loan rent and income limit charts contain a table with the rent and income limits required by each loan program statute or rule. Some rent and income limits, such as MTSPs for housing tax credits and bonds, and affordable to local workforce rent limits, are held harmless from decreases. However, some are not held harmless, so owners need to carefully review the new limits when they are published. Actual rents may need to be decreased to remain in compliance if rent limits decrease. Owners of properties with a Minnesota Housing Amortizing Loan, or those otherwise subject to asset management or Section 8 contract oversight by a housing management officer, should be aware that Minnesota Housing must approve any rent increases through the annual budget review process. All rent and income limits used by Minnesota Housing's deferred loans originated from state or federal program statutes or rules, or were approved by Minnesota Housing's board. In general, Minnesota Housing uses HUD-published income limits to calculate rent limits. Some limits also use HUD's fair market rents in their formulas, and the affordable to local workforce limits also use wage data from the Minnesota Department of Employment and Economic Development. All rent limits are gross rent limits, which must include an allowance for any tenant-paid utilities. The rent limit calculation assumes that there will be 1.5 persons per bedroom paying no more than 30% of the applicable income limit toward their housing cost. Note that zero-bedroom efficiency, single-room occupancy, or SRO use the one-person limit. This is consistent with rent limit calculations used for most federal programs. The rent and income calculations are completed for you in the charts we publish on our website, so you do not need to run your own calculations. If you think the rent and income limits stated in your legal agreements are not represented in any of Minnesota Housing's published charts, contact your assigned compliance officer. Income limits are usually stated as a percentage of area median income, AMI, statewide median income, SMI, and some use the greater of AMI or SMI. They may also be a percentage of metro median, which uses the median income for the Minneapolis-St. Paul Metropolitan Statistical Area, MSA, defined by HUD. When metro median is used in properties outside the Minneapolis-St. Paul MSA, the properties use the same limits as properties inside the Minneapolis-St. Paul MSA. MTSP is the multifamily tax subsidy project limits that are required for properties financed with tax-exempt bonds or low-income housing tax credits, also referred to as housing tax credits. These limits may also be used for Minnesota Housing's deferred loans. Some limits are adjusted for household size and some are not. A few of Minnesota Housing's limits only adjust for households when there are 5 or more members. It is important to understand which limits are required for your deferred loans, so you do not inadvertently reject applicants who would otherwise be eligible, or rent to households who are not income eligible, which would be a compliance violation. Utilities are an essential housing cost. Therefore, gross rents must include an allowance for any tenant-paid utilities. If the owner pays all utilities, the utility allowance, referred to as the UA, is $0. However, if tenants are responsible for paying any utilities, the owner must obtain a schedule of UAs from the local Public Housing Authority, or PHA, or from the Local Housing and Redevelopment Authority, also known as an HRA, that administers Section 8 housing choice vouchers in the area the property is located. It is the owner's responsibility to obtain and update UAs at least annually. Minnesota Housing will not provide owners with UAs. Owners have 90 days to implement new UAs and may need to decrease tenant rents if an increase in UAs causes the rents to exceed the allowable rent limit. As part of Minnesota Housing's periodic inspections, the UA and source documentation from the HRA or PHA for the current year and 2 prior years will be reviewed, so it is important to retain them with your property records. Properties with project-based Section 8, United States Department of Agriculture, USDA Rural Development Financing, housing tax credits, home, and National Housing Trust Fund funds have specific utility allowance requirements. So if your property is blended with any of these, consult respective program guides. Many PHAs and HRAs post their UAs on their website. If they do not, you may need to contact them directly. You will find it most efficient if you ask to speak with a staff person in the Section 8 Housing Choice Voucher Department, as the main receptionist may not know what a UA is. This slide provides an example of what a typical UA from a local PHA looks like. The first thing you should look for is the effective date. If the effective date is more than a year old, contact staff at the PHA or HRA directly and ask if there has been an update. If they tell you the UA has not been updated and you have the current version, document your conversation and include the date contact was made, what was asked and answered, and name and phone number of the person you spoke with. Keep this information with your property records. When a compliance officer reviews your UAs, submit this review with your UA source documentation to demonstrate that you have updated the UA annually. The UAs use different numbers for apartments versus townhomes versus single-family dwellings because utility costs are different based on the type of construction. Be sure to use the correct figures based on the type of units in your property. In the example on the slide, which is for an apartment dwelling, residents in zero-bedroom units are required to pay for electricity, sometimes referred to as unit electric or other electric lights. In this example, the units have electric stoves, so you must also factor in cooking electric. Based on these figures, the UA for a zero-bedroom unit is $39 per month starting on 10/1/2019. $5 for cooking electric plus $34 for unit other electric lights, which also includes electric appliances and anything plugged into an electrical outlet. If the rent limit is $600 and the UA is $39, the owner cannot charge a tenant more than $561 per month for rent. In this example, if the unit has a gas stove, the UA would be $37 because the UA for cooking gas is only $3, as opposed to the $5 for cooking electric. If the resident also paid for gas heat, you would include an additional $30 and the UA would be $67. What would the UA be for one-bedroom units where the residents pay for electric only and units have electric stoves? If you said $44, give yourself a gold star. For a one-bedroom unit, cooking electric is $7 and other electric lights is $37 for a total of $44. Some PHAs list additional surcharges at the bottom of their charts, so be sure to look for those and include them where applicable. In addition to rent and income limits, deferred loans may also be conditioned upon serving certain populations, such as people with behavioral health needs, seniors, or families with children. They may require a certain number of units be set aside and rented to households who meet Minnesota Housing's definition of long-term homeless, LTH, high-priority homeless, HPH, or people with disabilities, PWD. They may also contain requirements that the owner maintain a smoke-free policy and lease and/or renew its project-based rental assistance contract for a minimum rent subsidy period. These restrictions will typically be stated in the Declaration of Land Use Restrictive Covenants, which is part of the deferred loan document signed at closing. Compliance officers will review for compliance with occupancy restrictions as stated in the loan documents. Most properties receiving financing from Minnesota Housing must have an Affirmative Fair Housing Marketing Plan, AFHMP. The exceptions are properties with fewer than 5 units, emergency shelters, public housing, and publicly owned housing developments. Also exempt are properties on Indian country, as defined by the federal government, including all land within the limits of any Indian reservation, all dependent Indian communities, and all Indian allotments. You will find detailed instructions and a very helpful toolkit to assist you in preparing your AFHMP on our Fair Housing webpage, which is linked on this slide. Properties that have USDA Rural Development Rental Assistance or a Rural Development Loan must follow Rural Development's AFHMP process. Developments that are covered under Performance-Based Contracted Administration, PBCA, will continue to follow HUD's AFHMP process. You will also find Minnesota Housing's Tenant Selection Plan guidelines on this page. Owners are encouraged to recognize that LTH and HPH units are intended to house people who often have poor credit, poor rental histories, or criminal backgrounds. To the extent permitted by the rules and regulations related to the type of housing, housing providers are encouraged to adopt lenient and flexible criteria regarding these common barriers when creating a tenant selection plan. For properties that are supportive housing or have units set aside for people who meet Minnesota Housing's definition of long-term homeless or high-priority homeless, refer to the Supportive Housing Information and Resources publication for occupancy guidance, including tenant screening, selection and retention plans, lease-up, vacancies, Homeless Management and Information System HMIS reporting requirements, and determining tenant rents in supportive housing. You can find links to these resources on the Supportive Housing webpage, which is linked on this slide. Compliance with Minnesota Housing's loans begins on the date the loan closes. Owners of properties that are occupied must prepare in advance of the closing date to meet their compliance requirements, especially if the property is not already subject to certifying tenant incomes. For new construction, compliance is gradually met as newly constructed units lease up. The principles we will review regarding vacant units will also apply to newly constructed units. Many loans have a minimum affordability period, that is, a minimum number of years the owner must comply with the income, rent, and occupancy requirements, even if the loan is repaid or forgiven. Many loans have a 15-year minimum affordability period, but some may be more than 15 years and some may be less. Check your program guide and/or loan documents carefully for language regarding a minimum affordability period. Most affordability periods end at loan maturity. One notable exception is publicly owned housing program or POP loans. These loans require a minimum affordability period of 35 years after the loan closes, even though the loan is forgiven after 20 years. When an owner receives a selection letter from Minnesota Housing or submits an application for available pipeline funds, the owner should understand what the rent and income limits for the loan will be. In order to position an occupied property to be compliant with rent, income, and other occupancy restrictions when the loan closes, the owner needs to begin certifying tenant eligibility for existing residents long before the loan is scheduled to close. If Minnesota Housing's loan will be used to acquire an occupied property, consider making access to tenants and tenant files for certification purposes a requirement of the purchase agreement, particularly if the management company will change after the property is acquired. Tenants living in units that are intended to comply with the deferred loan must complete a self-certification of income and household size. Compare the gross annual household income certified by the household to the applicable income limit. If the gross annual household income is at or below the income limit, the household is income eligible. If the gross annual household income is above the income limit, even by a penny, the household is not income eligible. Keep in mind that some tenants may not respond to requests for income information, or they may respond but do not wish to supply income information, and some may not be income eligible. Any units not certified or over income do not comply and cannot be counted as program-assisted units. Owners will need to formulate a plan for how they will deal with occupied non-qualified units if they are intended to be program-assisted units. Any relocation plan and budget must be consistent with Minnesota Housing's prohibition on involuntary displacement. For vacant units or for units in newly built properties, all applicants must be required to certify their income prior to being approved for occupancy. Do not allow applicants to move into vacant program-assisted units without first establishing they are income eligible. You will find it difficult, if not impossible, to get households to certify their income after they have moved in. Again, any units not certified or units that are occupied by an over-income household will not comply with the deferred loan. Having said that, there may be some exceptions. Unless units are subject to a bond compliance agreement or state or federal statute or rule states otherwise, existing units occupied by qualified housing tax credit households and/or households qualified for an existing loan from Minnesota Housing will remain qualified upon closing of new financing from Minnesota Housing, provided that the new restrictions are the same or less restrictive than the existing financing or housing tax credits. This applies regardless of whether the household's income at the time of the new loan closing is unknown or exceeds the allowable income limit for the new loan. Note that this exception is for income only. Rents must comply with the rent restrictions for all applicable financing, and other occupancy requirements may apply. For example, Main Street Apartments is a 100-unit property with an existing allocation of housing tax credits. The rent and income restrictions are 60% MTSP for all units, and all units are occupied by households that qualified at 60% MTSP income limits. The property is receiving a new HIB loan restricting 100% of the units at 60% MTSP. The HIB loan is also subject to a bond compliance agreement, which requires 40% of the units in the property to be income restricted at 60% MTSP. For bond compliance, 40 units must be fully income verified and certified and meet the 60% MTSP initial income restrictions according to the requirements and timelines in the bond compliance agreement. The remaining 60 units occupied by households who are income qualified for the 60% MTSP housing tax credit restriction will be automatically considered in compliance with the 60% MTSP HIB loan income limit upon closing. Another exception may be for households that receive federal or state project-based or tenant-based rental assistance or housing support from the Minnesota Department of Human Services, commonly referred to as DHS. These households may be deemed to comply with the income restrictions even if their income is over the applicable limit for the loan. Review your Minnesota Housing loan documents carefully to see if they contain this or similar language. Not all do. As noted, this does not apply to loan programs funded with general obligation bonds, such as POP loans. Those loans may have an income restriction or may simply require that assisted units be occupied by a resident of public housing. Review your loan documents carefully. The next few slides will cover the forms required to certify households and collect proper information to report to Minnesota Housing for monitoring purposes. Owners must retain completed forms in tenant files. Submit them to Minnesota Housing only upon request. The Government Data Practices Act disclosure statement is required by Minnesota's Data Practices Statute. It must be completed by all approved applicants for and existing tenants in program-assisted units. It is used to inform the tenant of the information they must disclose for program eligibility and the information that is collected but not required, meaning we are asking for it, but it is not required as a condition of occupancy. It also informs the tenant that the owner will share their information with Minnesota Housing, the Minnesota Attorney General's Office, HUD, the IRS, and other persons and/or governmental entities who have statutory authority to review the information, investigate specific conduct, and/or take appropriate legal action, including law enforcement agencies, courts, and other regulatory agencies. Print the name of each adult household member in the grid at the top of the form. Enter the name of the property in the large box. Check the appropriate box or boxes in the second section on the first page to indicate what attachment applies to the individual unit based on the program or programs that funded it. Most deferred loans use attachment number 3. All adult household members must sign and date the form, and owners must supply the resident with a copy. Owners may provide a hard paper copy or an electronic copy. Owners must take the appropriate steps to protect private data, including not sharing private data with anyone not authorized by the resident, and to safely and securely dispose of any documents containing personally identifiable information. Shredding is the most common way to dispose of private data. The initial occupancy statement by tenant is Minnesota Housing's self-certification of income form for deferred loans. Owners may use the most recent HUD 50059, 50058, RD 1944-8, or verification of housing support or other rental assistance program to certify eligibility for units that are deemed to comply. Or if you are required to verify and certify income for another funding source, such as housing tax credits, home, or National Housing Trust Fund funds, you may use the tenant income certification form required by those programs. It is not necessary to also complete the initial occupancy statement by tenant form if you are using one of these more detailed income certification forms. Assuming no other certification is being used, have the head of household complete, sign, and date Part 1 to certify the total gross annual income from all household members and the number of persons who will occupy the unit. If the total gross annual income from all household members is lower than the income limit for the loan, the household is income qualified. If it is greater than the income limit for the loan, the household may not be qualified unless they receive project-based or tenant-based rental assistance, and the loan has language deeming such rent assistance households to comply. You will identify this in Part 2 of the form. If the household is approved for occupancy, complete Part 2. Enter the unit number, the number of bedrooms, and the actual move-in date. Check the appropriate box regarding receipt of rental assistance. If the tenant receives rental assistance, enter the date the rental assistance began or will begin. Enter the breakdown of the rent amount, what the tenant pays, the utility allowance for tenant-paid utilities, and any monthly charges that are in addition to rent that are not optional to the tenant, including any month-to-month lease fees, and the amount of rental assistance. Enter 0 if no rental assistance is or will be received. Enter the total rent. Certify the household is eligible by completing Part 3. Enter the name of all Minnesota Housing Deferred Loan programs that this certification serves to count as an eligible program-assisted unit. Sign, print, and date. Residents approved for program-assisted units must also complete a head of household demographic information form. The form is required, but tenants have the option to select "I choose not to respond" to questions that are not required as a condition of occupancy. The information supplied by residents assists Minnesota Housing in analyzing who its loan programs are serving and allows us to report to our board members, the Minnesota Legislature, and others as evidence supporting the need for more affordable funding. We appreciate your cooperation in encouraging residents to fully complete this form. Retain the initial occupancy statement by tenant form, the Government Data Practices Act disclosure statement with the applicable attachments, and the head of household demographic information form in the tenant file, along with the resident application, lease addenda, and any other documentation you require for resident screening and other purposes. Data from completed forms will be needed for reporting to Minnesota Housing. Do not submit the forms to Minnesota Housing unless requested. If the loan that financed your property requires a certain number of supportive housing units to be set aside and rented to households who meet the definition of long-term homeless or high-priority homeless, visit https://www.mnhousing.gov/rental-housing-supportive-housing.html for links to verification forms, reporting requirements, and other valuable supportive housing information. For existing properties with LTH units, in the 2018 application for multifamily capital funding, Minnesota Housing changed the eligibility criteria for supportive housing units from LTH to HPH. Existing properties with units restricted to serving LTH households may use the HPH eligibility criteria instead of the LTH eligibility criteria. For more information, refer to the HPH eligibility change information and FAQs and the training slides, all found on the service provider webpage. If the loan that financed your property requires a certain number of units to be set aside and rented to people with disabilities, you can find the Self-Certification of Eligibility for Persons with Disabilities unit form on the property manager's main page. Click the link for relevant property management documents, forms, and resources. Click Occupancy Forms. Click Learn More about Occupancy Forms, then click Other Forms. As mentioned previously, properties must comply with loan agreements at the time the loan agreements are executed, at least 120 days prior to the anticipated closing date, Borrowers must certify to the number of units that they have certified as program units on a borrower-owner certification of tenant eligibility form and submit via Minnesota Housing's multifamily customer portal, or email the underwriter for applications not submitted via the portal. Include a written plan, timeline, and budget to address any occupied units not in compliance. Minnesota Housing will review the plan and determine whether the closing can proceed as scheduled or if other actions need to be taken. The Borrower-Owner Certification of Tenant Eligibility form can be found at https://mnhousing.gov/rental-housing/post-selection.html. The form is also linked in the slide. Remember, as units vacate, owners must complete the certification paperwork described previously before allowing new households to move into program-assisted units. Minnesota Housing's deferred loans require households to meet eligibility requirements at initial occupancy. Note that for units occupied at the time of closing, eligibility is met at initial certification. After a household is determined to be eligible, there is no requirement to recertify income in later years. Any increases in tenant income and/or loss of rental assistance or housing support will not disqualify a household from continuing to occupy a program-assisted unit. Note, however, that MERIF does have recertification and continuing eligibility requirements. Refer to the MERIF Frequently Asked Questions found on our website for additional information. Non-qualified households may become income qualified for a program-assisted unit if their household income decreases below the applicable income limit, income limits increase, or if the household begins to receive rental assistance or housing support. These households should complete the certification paperwork described in previous slides to qualify. For example, Mary and John Smith occupy Unit 202 at the time of Minnesota Housing deferred loan closes. The Smiths are not income eligible for a program-assisted unit because their income is above the applicable limit, and they do not receive rental assistance. The owner may not count Unit 202 as a program-assisted unit at the time the loan closes. The loan allows for a small number of unrestricted units, therefore the loan is in compliance at closing. At a later time during their occupancy, the Smiths' gross annual household income decreases below the applicable income limit for the Minnesota Housing deferred loan that financed the property. The owner may now certify the Smith household, adjust the rent if needed so it is below the allowable rent limit, and count Unit 202 as a program-assisted unit. After a loan closes, Minnesota Housing staff will send the owner an email with a username and password, as well as login instructions for its compliance reporting and monitoring system known as the Property Online Reporting Tool, or PORT. The owner will also be provided with contact information for the assigned compliance officer. We encourage owners to log in and review the information set up in PORT for accuracy and notify the assigned compliance officer if there are any errors. Each year, on or before February 15th or the next business day, owners must log into PORT and submit an annual certification of compliance, as well as occupancy data for all units in the property for the prior calendar year. An e-news reminder is sent in December and January. Reporting and monitoring is required until the end of the last full year of the compliance period. After February 15th, compliance officers review the annual owner certification and occupancy data for compliance with the requirements of the loan. The compliance officer will send an email with the results of their review. Failure to complete an owner certification or submit occupancy information is considered non-compliant. Each year, both the property manager and the service provider individually complete an online survey about each property with LTH-HPH units. A link to the survey is typically emailed with the owner certification reminder notice in December and is due in February. Respondents are asked to identify areas of strengths and challenges at the property. Minnesota Housing uses summarized data from the survey to gauge customer satisfaction, identify trends and issues, plan training, and drive future policy and business decisions. Minnesota Housing also looks at individual property responses in order to provide information about operations and service provisions. The survey is an important tool used to better understand Minnesota Housing's supportive housing portfolio. Minnesota Housing recently updated its policy regarding annual operating data reports. In accordance with the property's loan documents, owners of properties financed with Minnesota Housing's deferred loans must continue to maintain annual operating data as part of the property's books and records and must make it available to Minnesota Housing upon request. Minnesota Housing no longer requires owners to submit annual operating data in port. The first inspection will be scheduled the year following loan closing. Subsequent inspections will be scheduled every 3 to 5 years, depending on the aggregate amount of Minnesota Housing's loan or loans, until the last full year of the compliance period. If a property also has housing tax credits, home, or National Housing Trust Fund funds, inspections will be conducted according to the schedule and requirements of the federal program. For properties subject to inspections by Asset Management for a Minnesota Housing Amortizing Loan, or by HUD's Real Estate Assessment Center, REAC, United States Department of Agriculture, USDA Rural Development, or other governmental entity, inspections will be coordinated to the extent possible to avoid duplication. The inspection begins with a request to review administrative records. Owners must complete a Compliance Information and Administrative Records Review form, which gives the compliance officer updated information on the property and its non-financial operations. The form is also used as a checklist to determine which administrative records pertaining to the property need to be submitted for review. For properties with units set aside and rented to households meeting the definition of long-term homeless or high-priority homeless, HPH review forms must be completed by the manager and service provider. The compliance officer will review the forms for any performance issues and will also review a sampling of tenant files to determine whether the owner has sufficiently verified that households meet the definition of LTH or that HPH households were referred by coordinated entry. The compliance officer will determine whether another governmental inspection satisfies Minnesota Housing's inspection requirements. If not, the compliance officer will schedule a physical inspection. Beginning on January 1st, 2024, HUD's National Standards for the Physical Inspection of Real Estate, NSPIRE, is Minnesota Housing's inspection standard. Health and safety violations must be corrected within 24 hours. The owner must submit evidence that all cited violations have been corrected. When compliance officers conduct their reviews, they expect to see properties in compliance and reporting done in a timely manner. However, when a compliance officer does identify non-compliance, they will send a notice of non-compliance via email to the owner. The notice will include a list of violations and instructions on what needs to be submitted to verify that corrections have been made. Compliance officers usually provide a 30-day period to correct. If more than 30 days is needed to make corrections and submit a response, owners must email the compliance officer and request an extension. Extension requests must include the reason for the delay and the plan and timeline for when the corrections will be completed. If an owner fails to correct or clarify the violation or violations within the allowed correction period, 2 additional reminders are sent via email, each with a 10-day response period. Owners may be considered in default of their loan agreements if they have not corrected the noncompliance or submitted an acceptable plan to make corrections after the due date for the third notice has expired. Minnesota Housing appreciates owners' efforts to maintain compliance with their loan agreements. Naturally, many things can change over the course of a 20 or 30-year loan. It is important that Minnesota Housing has the most current contact information for the owner and management company. It is the owner's responsibility to notify Minnesota Housing if the main contact person changes or the primary contact for the management company changes, or their phone number, email address, or mailing address changes, so we can update our records. If the owner contact changes, we also need to provide that person with login credentials to port. You can find the property name or owner management contact information change form under the Other Change Notifications and Casualty Loss Forms tab at the link provided on the slide. Some changes may affect Minnesota Housing loan agreements or require our approval. Owners may not incur additional debt, whether secured or unsecured, sell, assign, convey, transfer, or otherwise encumber the mortgaged property without the express prior written consent of Minnesota Housing. This includes, but is not limited to, activities such as granting an easement, selling or conveying any portion of the mortgaged property, or transferring substantial interest of the borrower as further described in the mortgage. Unapproved activities can create events of default under the loan documents and may lead to legal action such as acceleration of the loan or foreclosure of the mortgage. A request for action, RFA process, is used for loan servicing and other property change requests. You must complete an RFA for all servicing requests. Additionally, proposed changes in use of a property, change in residential population served or unit count, unit reconfiguration or alterations to the property, or change in the management company will require submission of an RFA. The contact change and RFA forms can be found at https://www.mnhousing.gov/rental-housing-change-notifications.html. It is important to submit the RFA before the change is made, or you risk being in default of your loan agreements. When in doubt, contact your assigned asset manager or compliance officer to help ensure compliance with your loan documents. This concludes the Deferred Loan Compliance and Monitoring General Information tutorial. If you have questions that were not answered during this tutorial, please contact your assigned compliance officer or the Multifamily Compliance Manager, Renee Dickinson, at renee.dickinson@state.mn.us or 651-296-9491.